folks, welcome to the weekly outlook. It's Monday the 18th of January. So we got a lot going on this week on the heels of last week, which didn't really see much going through. Of course, we had the stock market come off its all-time highs. We saw Bitcoin hit 42,000 plus, and we saw gold being sold off massively. We also saw the US dollar finding a bit of support as the US Treasury yields were edging higher. That's basically been the name of the game since the Democrats won control of the Senate, basically easing the way for more stimulus. So more about that later. Of course, we've got the inauguration of Biden this coming Wednesday. Not expecting that to be too significant in terms of market movements in itself. But of course, all eyes will be on the stimulus and all the money that Biden and the Democrats want to put in to revive the economy. Stock markets are certainly liking that at the moment. Okay, let's get straight into it. Let's have a look at what we're looking at. Okay, so the pairs in the spotlight that Max, myself and Paul are looking at this week. We're looking at buying the US oil. So your oil has basically completed a corrective wave higher. It's now come into a major supply and demand zone, and we're looking at the next move in oil basically up to 54.5. You know, higher oil prices tend to support the Canadian dollar as well. So if you are trading the Canadian dollar, keep an eye on the oil prices. The next level of resistance up there at 54.5. Also, in other trade in the spotlight this week, we're looking at a buy of the pound against the Australian dollar. Pound has been very strong recently after the Brexit negotiations were ended up in a trade agreement. Also, the fact that COVID is ripping through the UK at the moment, but the vaccine rollout is basically accelerating as well. So hopefully the British pound is going to do well, and Australian dollar is under pressure. So buying the pound against the Australian dollar. Now this is my trade pick. I'm looking at selling the euro against the Japanese yen for a number of reasons. As we know, the US dollar is edging higher. As the US dollar edges higher, the most actively traded currency pair against the US dollar is the euro. So as the dollar goes up, the euro should come down. Now, if the stock market does continue its pullback that we're seeing at the moment, that is going to support the Japanese yen, a low-yielding, safe haven currency. So selling the euro against buying the Japanese yen makes for a good trade. And if you look at the charts as well, we've broken through some key levels of support, structural support. So the path of least resistance now is lower. And this is Paul's top pick. Paul is looking at a buy of the euro against the pound. He's looking at the COVID being affecting the pound worse than it is going to affect the euro. So he's basically looking at a buy of the euro against the pound. And Max is looking at natural gas. I, for one, haven't traded natural gas for many years, but Max has got a big view on selling the natural gas, and he's got support and resistance loans. You can zoom in there and see his reasoning as well. Of course, you can join us in the trading room and you can discuss these with Max, myself and Paul, as well as, you know, get to hear exactly what Max is thinking about on his natural gas technical play. So as I said, we have got lots of data out this week. Basically, we've got lots of central bank rate decisions. Central bank basically decides on interest rates. We've basically got central bank decisions in Canada and in Euro. And if I go over now to the calendar, I'll show you exactly what the week has in store in terms of economic releases. Okay, so this is the economic calendar. It basically tells us of the news events that are coming out in the forthcoming week. Now you can access this at the ForexSignals.com website. Just go to ForexSignals.com/economic-calendar and you'll be able to pull up this. Now we'll look out for the next 7 days. Unfortunately, showing my age now, need to wear my glasses. Anything that's deemed to be high impact news, anything that's likely to have a bigger impact on the markets is going to be deemed to be red. So we've got an impact sort of assessor there on the right here. So in the UK on the 20th, that's basically on Wednesday, we're expecting to see some CPI data out of the UK, inflation data out. So lots of inflation data coming out of the UK on Jan 20th, RPI and retail price index and core inflation and so forth, producer prices. Why is that important? Well, it's important because central bankers around the world, they are mandated to control inflation. That's one of their mandates, that and of course employment as well. If interest rates need to be moved, they need to be moved normally because inflation is heading up. So us as traders, we're always looking at inflationary data. So we'll be keeping a close eye this week on the UK inflation data as well. Okay, later on in the week, we've got CPI out of Canada as well. That's actually on the same day. But we've got also interest rate decisions out of Canada. Bank of Canada, a rate decision. So the Bank of Canada basically decide on whether they're going to move interest rates or not. And we are very keen on this type of news event. Why? Because it basically gives us a clue where the currency is going. If an economy is booming, chances are interest rates have to rise. If an economy is sluggish, if economy needs a boost, they cut interest rates. So we're always looking to see where interest rates are going. Of course, if an economy is booming and interest rates are going up, to enjoy those higher interest rates, then you need to buy that currency. So strong, higher interest rates normally supports a stronger currency, and softer interest rates basically lead to a weaker currency as well. So we'll be keeping an eye on the Bank of Canada. They're unlikely to move interest rates this time, but that's the general consensus anyway. But if you do look at what's been going on there, unemployment's been edging up, the COVID spread there has been pretty rampant as well. So there is a school of thought saying that they may indeed cut interest rates. I, for one, don't think they will, but there's certainly a case building that they will cut interest rates at some point going forward. So we'll, more importantly, not just look at the decision, but look at the follow-on statement, because I always give a statement afterwards giving their projections and the reasons why they're doing it. It's basically called forward guidance. Then on Thursday we've got the ECB, that's the European Central Bank. Again, that's when the Euro Bank decides whether they're going to move interest rates or lower or indeed higher. The negative rates are there at the moment. Again, you'll see here the consensus is that they're going to keep rates at -0.5, so -0.5%. They're not going to be changing interest rates there at the moment. But again, we look for the statements, forward guidance and so forth. Okay, we've got basically job numbers again out in the US later on in the week. We've got the Philly Fed Manufacturing Index as well. We'll be keeping an eye on that. UK wise, we've got CPI coming out of Japan as well. So we always watch for the CPI data. Remember, that's the inflation data, gives us a clue of the state of the economy and indeed whether they need to add more guidance or not guidance, add more stimulus into the economy in the form of QE, buying bonds and so forth. So we always look to see the inflation data coming out of Japan. UK, we've got retail sales out on the 22nd. Again, retail sales, it's important because if people are spending money, more people are confident about the economy, they're spending, that basically has an upward pressure on inflation, that has an upward pressure on interest rates. So we always look at the retail sales. What are people doing on the high street? Are they spending money or are they keeping it to themselves? Later on in the week, we've got PMI data. PMI data out of the Eurozone and out of the UK. PMI stands for Purchasing Managers Index. Very important forward-looking indicator. It's basically a survey of all the business leaders in the different sectors, manufacturing, services and so forth, basically asking them their opinion going forward. Are they bullish about the economy? Are they employing more staff? Are they investing in more machinery and plant and so forth? So it's a survey. Anything above 50 is deemed to be an economy that is expanding. Anything below 50 is an economy that is contracting. The PMI data services, we're actually going for 55.3 that's the US services. But if you look here, sorry, here we go. The European services are going for 55, which is just a slightly lower than the previous month as well. So we'll be keeping an eye on this data. Services PMI still struggling down there at 44.8. That's the estimate anyway. Remember, just after the pandemic hit back in March 2020, these PMI data were back down at around 10, 11. So really quite severe moves in the PMI data. So we keep an eye on the PMI data. So lots of news coming out this week. Do go and check out the calendar. Here you'll see the previous, you'll the estimate and the actual as well. When the actual comes out, that's what moves the market. Not necessarily just a bad number in terms of where it is, but what it is in relation to what is estimated. That's why, and that's how we use this economic calendar. Okay, so that's basically the news releases. I just want to show you this before I end up. This is our momentum meter. This basically tells me exactly what's going on in the Forex market. I don't know how anyone trades the Forex market without looking at something like this or similar to this. It basically tells me what currencies are strong and which currencies are weak. You'll see here at the moment, this green line. This green line is the greenback. That's why I coloured it green. It's the US dollar. It's showing some big strength. This is the 4-hour chart. So on the 4-hour chart, the US dollar is gaining momentum as those bond yields pushing higher. Bond yields are up significantly now since those Senate elections just a couple of weeks ago. But interestingly enough here, we're seeing the Japanese yen. This is the bronze line here. The Japanese yen is also showing signs of strength. In the past, quite often you'll see a yen increase just before the US stock market takes a tumble. I don't know if it's going to happen this week, but certainly we always keep an eye on this sort of gaining momentum of the Japanese yen, if indeed that does lead to a drop back in the stocks. As I've said in the past, if the US dollar is strong, typically you get a weaker euro, and you see the euro down here. That is the blue line down there at the moment. So at the moment, it's the dollar strength, it's the euro weakness, and the pound is taking a bit of a tumble. So maybe Paul's pick for the week of selling the pound is going to play and pay dividends. We will see. Canadian dollar there, it was a period of was going through a period of strength. It is coming back down now and likely to be weak, I think, into the Bank of Canada's rate decision later on in the week. But make sure you look at something like this when you're trading the currency markets. We like to buy the strong currencies and sell the weak currencies. Now, if you want to join us inside the trading room, you can do so. I think you can take a 7-day free trial as well. The link's going to be down here somewhere. Come and chat with us, talk about these trade ideas and many more. Lots of opportunities this week. So hopefully you have a good one. See you next week.